What's going on, everybody? Today's video is going to be an update on the bigger picture of what's happening in crypto, what has happened in the past week, and where I believe we are going to go in the month of June and quite possibly the next few months. To illustrate that, what I've done is I've created a notepad, a sheet where I've decided to document all the things that I'm paying attention to in the market, what I believe is good or bad, what I believe are going to be key support and resistance levels that we need to hold or break above to ensure that we still have a continuation in this bull market, if we even have a bull market at all over the next several months. So I'm going to discuss my thoughts on the market, my bias, how I'm looking to hedge and move my portfolio around to make sure that I move toe to toe with the market conditions and not just be hopeful that the market will give me a good exit or we're definitely continuing a bull market or any of the hopium. Okay. I'm trying not to insert my personal hope and bias into the market, but rather what I'm reading, what the market is really showing me. So first thing, what we're going to do is we're going to mark out some key things that I'm paying attention to, which I've written down right here. Then we're going to go over some charts on the higher time frames. Then we're going to go over altcoins, some altcoins that I'm definitely paying attention to. Then we'll look at some newsletters and on-chain metrics that I pay attention to. For example, one of these is from Mira. The other one is from Pomp. And the third one is from Arthur Hayes, who was the former CEO of BitMEX. And then after that, what we're going to do is we're going to discuss what we need in terms of levels on a chart from a daily or weekly perspective to show us how we can get into the continuation mode of the bull market, or if we're going to retrace down further, how much further could we go? And how long could that pain last? So let's get started, right? Today, we're going to write down the date, May 28th, 2021. I do this for just illustration purposes, just so we know exactly where we are in context of the market, right? So the BTC price right now, as you can see, is 36,100, right? 36,100. So let's start discussing the bigger picture, because obviously the bigger picture always matters, which is the stock market and the economy and what the Fed is doing. Well, I believe for the most part that the stock market has been relatively unchanged in terms of tech and growth. For example, if we look at the Qs, which are NASDAQ-centric stocks, right? These are growth and tech stocks. They actually haven't done a whole lot over the last several months. You can see this right here. Since basically around middle of February, they've kind of just gone sideways in a large range. Most of these stocks have not really moved. And that's illustrated by, say, something as simple as Tesla stock right here, right? You can see end of January, basically middle of February, it's just been going down or going, sideways up and down, right? Let's look at Amazon. What has Amazon done? Not a whole lot, basically gone sideways since the middle of last year. Okay. What about Zoom stock, right? Okay. Zoom also hit a huge high in October, has gone down since. So you could see what I'm trying to illustrate is last year, we had a very unique black swan event, which caught everybody off guard, and it caught the Fed and the government off guard too. That was the COVID crisis, COVID sell-off. After what happened was the Fed had an aggressive policy of wanting to keep interest rates low, keep the dollar printing press on, and make sure basically that from the stock market perspective, right, other funds and hedge funds and institutions that are involved, they tried to pump up these tech and growth stocks to astronomical heights. Along with that, crypto went much higher too. Since then, we really haven't had any Fed policy changes, right? So that's helped the crypto market thus far. So why do we have all of a sudden a shift in the winds? Well, there's a few things that have happened. Number one, crypto from bottom to top March 2020 low, the COVID crisis, to where we hit a 60K, 64K high up here, we had basically gone almost 20x. Ethereum in the same time span had gone from this low down here, March low, up here, almost 40 to 45x. Many other altcoins had done almost something similar to Ethereum, if not even better. Some went on to put in 50x's and 100x's. You guys know what I'm talking about. There were crazy amounts of altcoins that were just full-on bull mode euphoria. And we saw this permeating the space across the board with TikTokers talking about stock market assets that they're trading. They're talking about Dogecoin. They're talking about crypto. They're talking about, these different dog coins and cat coins, right? So the point is that the euphoria and everything that you needed to have a market scream to you that it's the top was there. The TikTokers talking about crap, about random altcoins in the crypto space, everybody rejoicing that crypto can never go lower, to the height of the euphoria. Everyone was talking about Lambos and getting rich. But then what happened? A huge sell-off in less than 10 days wiped out almost everybody, wiped out about $1 trillion off the market cap, and it wiped off about 10 to 15 billion in 10 days in open interest. These are the levered positions. We had close to, over the last, I think, several days or several weeks, we've had close to about 1.5 million traders completely liquidated. That's a lot of money lost from the market. And a lot of people who are probably just broke now, sadly, because they probably did not realize that they could lose all their money in levered positions. So all this has brought us back down to reality of where we are in the current context of the market. Now, at present moment, there's not a single thing that can tell us that from here, we have to keep going bull mode straight up. Okay, there's really not a single thing that's telling us that. But there are other factors that are actually screaming at us that this could have been the temporary top. Now, again, I'm going to say temporary top because I don't believe, no matter what, this top is going to be similar to this top. And then, the 6-month, 9-month, 2-year, sideways price action. I don't really believe that will happen here. We're going to put in a different kind of top, in my opinion. But I do believe that this is likely the top for at least several weeks and maybe even several months. Now, here's what's happened. Ethereum dropped from a high to a low of about 60% in the span of maybe 10 days, 12 days at most. Bitcoin did something similar, where basically from this date onward, it dropped about 52%. That was in a span of almost 10 to 12 days. Altcoins almost dropped 70, 80% in some cases. A lot of them were definitely down 50 to 60%, just like Ethereum, just like Bitcoin. But what caused that sell-off? Other than the fact that we knew that things were screaming at top. Well, there were other things added to the narrative. I believe that this recent sell-off that we saw was largely BTC driven. The market was obviously primed for a sell-off, and it was primed for a big pullback because there was way too much excitement, euphoria, and too many people using excess leverage and no risk controls. So it was the perfect conditions where you have too much exuberance and confidence in people who think they could keep making money on the way up. And those are the best conditions for a complete total wipeout. It happens all the time. If this is your first rodeo, I'm sorry it had to happen this way, but it's a fact of life and it's a fact of markets. You have to recognize that what goes up so fast will also come down just as fast and just as hard. So I believe that this sell-off was largely BTC driven. The other narratives were added to that were Elon, his tweets about ESG, ESG and energy issues were the main driver. Plus the Chinese mining power breakup, that was an important part of all this stuff that was happening in Bitcoin over the last week or two. Now, in my opinion, these are really, really good signs for the foreseeable future for Bitcoin and its price action. But in the near term, it's going to suck. So how do we know some of this stuff was happening? Well, part of it is actually written in this newsletter that Pomp posted. It's from Will Clemente. He's discussing a lot of on-chain data. What Will is basically talking about in this newsletter is, first of all, there's a clear rotation from the short-term holders to the long-term holders. On top of that, there is a large amount of big money coming in and steadily accumulating. And this is specific regarding to Bitcoin. Additionally, what we also have is we had a lot of Chinese miners that were selling their Bitcoin because of the FUD or the news that was coming out of China the last week or two. So all of that caused a massive panic in the market and more supply than the market could handle. On top of that, you add to the fact that we had a lot of levered positions in the market across the board. So you're probably wondering, why did other altcoins get impacted? Because first and foremost, Bitcoin drives the narrative for all other altcoins. So basically, since February, Bitcoin was going sideways and altcoins were enjoying the party. And at the same time, Bitcoin dominance was going down. But when Bitcoin starts to panic and roll over, this is where the biggest money flows start to exit from, because Bitcoin is the most liquid asset. So when money flows start to exit and sell out their positions in Bitcoin, it triggers alerts and bots and algos across the board. Whether you're in Ethereum, Cardano, Sushi, Matic, any other altcoin, they start mimicking the movements of Bitcoin. Because on the way down, there's two things happening. The algos and the bots and people themselves are reacting to the sell-off of Bitcoin. Additionally, when you have levered positions or even unlevered positions of spot in a market that is so closely tied together, when your Bitcoin position starts going down, if you're a big fund, what you have to do is you have to start selling other assets to be able to cover leverage or cover the losses or to hedge in other parts of the market. Meaning, if Bitcoin is going down and say a fund owns Ethereum and Sushi and Rune, they might have to start selling chunks of all of that just to ensure that, wait a second, can we put on a hedge by selling these other altcoins and then put on a hedge in Bitcoin? Because they can't sure as hell put on a hedge in Matic or Rune because those markets are not that liquid. If you need to place a, I don't know, $5-10 million short order, you can't just do that market in Cardano or Rune. You have to do that probably in BTC. So what you do is you have to start selling your less liquid positions like altcoins, and you have to start piling into the asset that's most liquid, which is Bitcoin. So that is one of the reasons why we probably had a more outsized movement in the selling of altcoins across the board, right? No matter what altcoin you pick, AVAX, okay, down from this area all the way down, it was down 70%. Band, how much is Band down? Let's pick it from this high, right? 75%. Let's take Solana. Okay, Solana from this point on was down 67%. So everything across the board, I mean, it doesn't matter what you pick, it was down a lot. But now that the market is bringing itself back up, what do we say about that? Well, I believe there's a few things happening that we have to pay attention to, okay? So we already discussed the macro picture, which is, in my opinion, there's not really a whole lot of change going on in the macro picture, right? Interest rates are low, the dollar printing press is going on. As long as the Fed policy continues, which I believe it likely will, things should be fine. As long as those things are fine, crypto should be okay. But once these things start pivoting and changing winds, which, by the way, the Fed has kind of alluded to, they talked about Fed tapering, which Mira right here talks about. Okay. So she talks about the crypto sell down over the past couple of weeks has been the most amount of value wiped out. Crypto investors are underrated. They underrated the Fed statements because we're largely been dancing to the same tune for the past 10 years, right? So basically what she's saying is when we had the Fed tapering talk, the conversation about inflation is maybe rearing its head. We had bad jobs numbers that came out, right? The last week or two. Okay. All these things were really, really brewing a storm inside of crypto. You just didn't know it because in the macro picture, this kind of stuff was happening. But here's the thing I believe that Mira may not be completely addressing as an issue, which is, yes, there are things that are coming up that might be bad for crypto, but for the most part, the Fed has not pivoted its policy. They're still largely just going about business as usual, printing money, keeping interest rates low. And that is the thing that matters for crypto. I definitely believe that innovation is huge in crypto, and more than likely, a lot of crypto products and projects will replace the inefficient and slower parts of finance, parts of technology in the current world that we live in. But that could take a while. Okay. So we have to keep in mind that in terms of cyclicality in crypto, all that stuff depends on the Fed. And if the Fed decides to pivot its policy, well, then money itself that may be heading into crypto may become a little bit more tighter, meaning investing wise, investors may not want to take as much risk in crypto because the one thing that's abundantly clear is that crypto is seen as a very, very risky asset class, especially even Bitcoin. If Bitcoin is seen as a risky asset class, you can be sure altcoins themselves are very, very risky and very illiquid. Okay, so in this thread, Mira discusses a lot of important things, and you can check out her Twitter feed. You can go to Asia Hodel, right? You can follow her. And there's a lot of important stuff on here that will show you that at present moment, effectively, what we need from the Fed is a continuation of the policy. We need Bitcoin and crypto to calm down, maybe go into a reaccumulation base, right? So here, a reaccumulation base would mean we just move sideways for a little while, gain some strength, grab some buyers at these levels, and then over the next few months, gain some steam and then start pushing up. Of course, when we do decide to push up, we want to make sure, like I said, the Fed policy and everything on that front is good. So we talked about the Pomp newsletter, the information that Will Clementi mentioned, right? And so the final thing we need to talk about is Arthur Hayes's newsletter, right? Arthur Hayes is probably one of the most prominent figures in crypto because he, in my opinion, understands markets better than anybody. And he understands exactly how crypto is going in terms of his vision of the future. And so the most important points to take away from this is these two right here, which is exactly what we spoke about. So he says, to be clear, there are two things that matter to my overall bullishness on the macro cryptocurrency market cap. The US government will begin to engage in nominal GDP targeting finance by the Fed purchasing treasury bills, notes, and bonds. Therefore, the Fed's balance sheet will be higher than today. Basically, what he's saying is the Fed, the government, is in a lot of trouble. We basically have to create money out of thin air, and we have to make sure that we put on this facade that everything is going fine and everybody has money and our economy is great and our stock market is great. Even though underlying, there are some issues. I wouldn't say we're completely broken as an economy, but there are some structural issues that we're dealing with. Point number two, decentralized finance, DeFi, will aggressively disintermediate many rent-seeking activities performed by centralized financial service institutions. The savings due to cheaper fees and more inclusiveness will flow to end user and to those who hold the tokens. So this is another thing that I really, really focus on is as you look into crypto, if you've been here since 2017, 18, 19, the one thing that's been abundantly clear is that the market is a little bit more separated and nuanced, where we now have a differentiation in sectors, right? So what we have is we have a more prominent sector of crypto, which is DeFi. There's other sectors of crypto like NFTs and privacy coins and centralized exchange tokens and DEX tokens. But DeFi itself is probably the leading sector of our entire crypto space. Things like Solana, things like Sushi, Link, SNX, Aave, YFI, all these altcoins, right? These are what I classify as DeFi blue chips. If we believe that the next several months, if we do get a bounce and say this is not the entire top of the market, right? I believe something like this will happen. We've already had a big sell-off. We're now going to get a dead cat bounce. We might get one more pullback like this and then push up. At this area, this is probably going to be the big deciding factor, at least for Solana. This zone right here, I'd say anywhere between, say, I don't know, 38 to like 40, 43, 44 up here. If we can get above this area and hold and start pushing away from it, then I'm fairly confident that this was a huge shakeout and we're going to go turbo mode in DeFi probably in the next month. But I don't think the probabilities for that are that high. I believe the probabilities are more so higher for this being a big sell-off, this being a dead cat bounce. Maybe we chop around here, maybe we push up here, but then from here we roll over. Probably for several weeks, maybe even several months. And you're probably thinking, well, what a bunch of BS. Like, why do we need that? Well, we need that because few things happen in situations like that. When you have a large range develop and when you have altcoins retracing a lot more, right? And for a more dragged out time, like this and this and this and this, if it just keeps dragging out like this, more of the hodlers will basically get bored of that asset and they'll likely sell because they're probably thinking, all right, guys, it looks like the party's over. My assets keep going down. I keep continuously losing USD value. Well, all right, game's over. Then they'll sell out. And maybe in a few weeks, few months, right, the market will then once again absorb all that supply and then pop. This is, again, the overall bullish narrative that I'm trying to come up with, right? If that's going to happen. Now, if this is the top, I won't know it for sure. And neither will you, and neither will anyone else. Because what we do know is this kind of sell-off definitely wiped out a lot of people. But does that mean that from here, we have to head down further? Well, not necessarily, right? It doesn't mean that we start a bear market. It doesn't mean that we have to start a bear market the same way that we did in 2018 and 2019. But I will say that in the best interest of DeFi and crypto for the longer term, you want something like this for the next several weeks, several months. And then you'll probably see another big boom. I don't know, maybe in September, October, November, sometime, like right near the tail end of the third quarter, beginning of the fourth quarter. I would figure that'd be a prime time movement for DeFi. And here's another thing. DeFi overall, has the fundamental outlook in DeFi changed? No. The only thing that changed in the last 2 weeks was the price. But price changing that much should not be ignored because the market always gives you the right value and the right pricing for everything on that specific moment that you're looking at price. It is always right, is what I'm trying to say. The market is always right. So if the market believes that Solana right now is at 31, there's a good reason for it. I know it's supply and demand economics when it comes to trading, but that doesn't mean that you get to just outright say, well, I don't believe Solana has to be here. I think it has to be at 50 or 60. Well, yeah, maybe, but you just may be wrong about the timing. Okay. And sometimes being wrong about the timing is as good as being wrong completely, right? Because if you're wrong about the timing and say you have levered positions or options, or say you just have your capital, sitting in an altcoin that just keeps dragging out and out and out, and you actually don't really know when the light at the end of the tunnel is going to come. Because guess what? I'm still discussing the fact that we might still be bullish if we go into this sideways range. But what about the fact that we're not bullish? What if overall, maybe temporarily the bubble has popped, and then from here, we retrace further and further for the next, I don't know, several months, maybe a year or two, like we did in 2018, 2019. Even though I believe the chances of that are low, you got to ask yourself that, are you going to be prepared for that? That's all I'm saying, right? And if you're not prepared, well, then what can you do to get prepared? See, these are all important questions that you have to ask yourself, because if you don't, no one else will. And no one else is going to sit here and give you answers and try to protect your capital, okay? You have to do that yourself, all right? So we discussed those different cases, right? I believe right now, okay, we are in the midst of a sell-off / local top. From here, we will likely consolidate / retrace for several months. DeFi is still hot and fundamentals have not changed, right? So I'm just writing this stuff down so you guys can see it visually as I'm discussing in a chart, as I'm writing it down, from point to point, right? So where are we going? Retrace / consolidate and bring alts down into reaccumulation range. Q3 end / Q4, then push DeFi and BTC. Okay. If I'm wrong, okay, how to hedge, right? So I'd probably say short this as a dead cat bounce. Okay, so what do I mean by that? All right, so here's my thought process. Okay, I have a couple of altcoins that are underwater. I have no levered positions, but a couple of spot positions that are underwater, which I prematurely picked off on this move right here when we had this bounce back up. But that's okay. You know what? Because I'm not scared to let go of losing positions. Right? So what I'm thinking is, let's just give Solana, for example. If my thought process is right, I believe Solana will do something like this, come back up here, take out this high, maybe even take out this high. And from here, I want to get out of my positions. And I may even short here once this starts breaking down. So short in this area, or if it starts continuing down here. And this doesn't just apply to Solana, it could be ETH or Bitcoin or other altcoins. Now, of course, this information is going to be for my Advantage members only, but I'm just letting you guys know that's my thought process. So I'll be selling out of my spot positions up here, no matter what. Not all of them, a few of them, because there's some that I believe for a longer period of time, and I invested with a multi-year cycle in mind. But some of them I want to let go because they're just really not looking good, right? So in this area, I would sell. In this area, if it rolls over, I would start shorting. Okay. What if I'm wrong? And what if we are really bullish and we do something that has really never been done in crypto, which is after such a huge move to the upside, we have a very sharp 50-60% sell-off. You recover in the next week or two, boom, boom, push off and put in new all-time highs, shortly after. Is that possible? Yeah, definitely. But is it likely? Not really. Because after you blow up an asset class like this in a span of 5 to 10 days, and you wipe out $1 trillion in the market cap. So let's go to this, right? Let's just go to total. Okay. This is a chart of the overall crypto market cap. At the height, okay, a couple of weeks back, crypto market cap was at $2.56 trillion. At the low right here, it had sold off 50%. It wiped off $1.3 trillion. Currently, Oops. Currently, it's down about 40%, still a $1 trillion wipeout. Now that has, I understand that when you see a market cap wipeout like that, it's not necessarily just overall, the entire market cap losing money. There's a lot of nuances to it, right? I can understand that, I don't know, exchanges may not be able to report properly the amount of money that was pulled off. Maybe a lot of people did enter stable coins, or they're going back and forth into hedging. Yeah, hedges may be closed out, right? So it could be many things. But the point is that the market cap is down from the highs and it sold off hard. And the overall market structure looks like this. The trend was broken right here. A key support and resistance level right here was broken. And now we're basically rejecting that level, right? So even from the simple market cap perspective, I would expect something like this. And if this fails, roll over, then we're likely headed back to these lows and maybe even lower lows down here. Okay. All right. So I talked about my hedge, talked about my thoughts on the sell-off, how to manage the portfolio or hedge. Now, I'll talk about this with the Advantage members, actually. So some of the altcoins that I'll be watching, these right here: Matic, Sushi, Solana, Aave, and Rune. Why? Because I believe that these are probably the ones that are attracting the most value and the most talent and probably the most money. I don't really know of that many other altcoins that are, but these are the ones I'm paying attention to, right? So once again, right, we talked about the bullish and the bearish cases, right? And so for Bitcoin, what is the bullish case? Well, if we get above 46, maybe even 50 up here, if we start holding up here, then it's game on. Then that means that everybody who sold down here got left behind. If we get up here and start pushing up and away, we're probably going back to new all-time highs fast. But again, what are the chances of this happening so fast, so soon? They're pretty thin. Okay, it's not impossible, but it's just lower chances. All right, so my game plan for June is very simple. All the things that I explained right here, and on top of that, being very, very risk averse in this market. I am going to treat this market like this is a dead cat bounce. I need to start unloading my positions, okay? And I want to buy on market strength, not weakness, or I simply wait for the market to drag out all the people, drag down all the sentiment, bore everyone to death, drag the market down further, and then a couple months out, hopefully if I get some prices down here, I don't really know what prices it'll be. For all I know, we might just be here, okay? But see, the difference is it's the price and the time spent in a range. That's what matters, okay? Right now, all you have is a huge drop, few days of upside, and then from here, we don't really know how it's going to go, right? So it's not just that, well, why would you buy only at 27 or 25 when you can buy at 30 right now? Because I don't know how the next few months are going to pan out. That's why. So you always have to factor in the unexpected, right? You always have to start looking out for what you may not be seeing in the market. It's very easy for anyone to hold a bias and not question it. I mean, any person could do that. But what makes a real trader is to be able to look at all parts of the market and recognize where you can save the most money, or rather not put your money at risk, and where is the best risk to reward trade when the market shows it. And at present moment, I don't see the long trade in alts as a bullish, as a proper risk to reward trade. I likely see it in BTC, maybe temporarily, but even that's murky. Okay. So that's all I have, folks. I think I've discussed a lot with y'all. I hope this information helps you in some way. Just hit the thumbs up if you like this content. Leave me your thoughts on where you think the market is going. And also follow me on Twitter, right? _alpha trades. And you can find us on our website right here. You could go sign up for the Advantage membership. The Advantage membership gives you access to all our lock channels right here. Amazing information. You can come trade with us, right? At the beginning of the year, I started a 5K account challenge with my Advantage members, right? I put in $5,000 and I said, I will show all my trades transparently and everything I'm doing in the market. Currently, that account, even after the sell-off, sits at 22,500. Right? Everything has been transparent. All my videos, all my analysis, everything. You can ask any of our Advantage members. It's been tremendously helpful, in my opinion, to all the members. So we have that challenge as one thing. We have our proprietary indicators, which we're going to be having another video on over the coming weekend. We have the Bitcoin trading section where we discuss everything related to Bitcoin, the metrics, the technicals that are lining up, what inflows and outflows are happening in Bitcoin, and then of course, Bitcoin chat, all the things regarding crypto, right? Or regarding Bitcoin, that is. And then we have an altcoin section right here and a DeFi section and a DEX and NFT section, okay? So we're always busy, always talk about crypto. We love crypto and we love trading in this market. All right. So that's it, y'all. That's all I got for you. Okay, I hope you found this analysis helpful. Until then, right, take care. Make sure your risk is controlled. Make sure you don't over lever in this market, right? Because this kind of chop, folks, it can really be devastating. So don't give up your gains back to the market. Don't try to make it all back on one trade. It will be devastating if you lose back, everything that you gain in the market. All right. See y'all later. Hit the thumbs up. Cheers.